Today, we're going to talk about the hidden costs of buying and selling a home. Now, you may have heard of a story of someone buying a house for $500,000 and selling it a few months later for $750,000 and thinking, wow, they made a ton of money. But in reality, they're probably not making as much as you might think because of all the hidden costs associated with buying and selling a property. And as a real estate investor who's owned dozens of homes and flipped a handful of properties, I'm going to be sharing the hidden costs that you may not be aware of when you buy a home. By not factoring these expenses, that juicy deal that you think is going to make you a lot of money can actually make you lose tens of thousands of dollars. So be sure to watch this video all the way until the end. Now let's get started. The first hidden costs that you may not be aware of are the closing costs when you actually buy a home. Many people think that they only need 20% of the home's purchase price to put in as a down payment for the home. But in reality, you also have to come up with the closing costs. So here are some of the ones that you may encounter. Now the first one are title fees. A title company is going to be the one that goes to the county and tells them that you are now the new owner of the property. They're gonna make sure that everything is done properly, and there's basically no way around this. In most states, you're gonna be using a title company, but in some states, you may be using an attorney. And the second one are escrow fees. Title and escrow are usually the same company, or they work very closely together. What escrow does is they take your money and hold it in one place, and when the transfer is complete, they're the ones that are actually gonna wire the money to the seller. Now, the reason why we use escrow companies is because you don't want buyers bringing $1 million of cash in a briefcase to the closing table to give to the seller. Lenders also aren't just going to give $1 million to the buyer to use as their loan and give to the seller, because if they just give the money to the buyers directly, then the buyers might run away and use the money for who knows what. So escrow is the one that holds everything together. They're going to be holding all the funds, and once title is complete, they're going to be the ones transferring the funds to the seller directly. But because they are a third-party company, they get paid to do the service. And again, there's nothing you can really do here. Everyone pays title and escrow fees, so it's just part of the process. The next cost you're going to have to face are appraisal fees. If you're getting a loan for a property, then the lender is going to want you to get an appraisal to make sure that you're not buying the property for way over what it's actually worth. And then the lender is going to lend you 80% of either the purchase price or the appraised value, whichever one's lower. So if you overbid on a property by like hundreds of thousands of dollars, then you're going to have to cover up that difference. The lender is not going to give you 80% of that overbidding you did. Appraisals are going to be around $600 to $800, and they typically take around 2 weeks to get done. So you want to schedule it in ASAP so you don't delay your closing. Now, the thing about appraisers is that the lender is going to be choosing the appraiser for you, and you're not able to choose one for yourself. This is so that there's no conflict of interest when it comes to seeing how much your property is worth. And the next hidden costs are your lender fees. Most lenders are not going to do loans for you for free. They're either going to charge you processing fees upfront, or they'll bake it into the rate. So instead of having a mortgage at, say, 6.5%, you're gonna have a mortgage at 6.75%, but then not have to pay any fees. They may also charge you discount points if you wanna lower your rate. So in this case, you might pay $10,000 to lower your rate by another 0.5%. Again, every lender is different, so talk to your lender about your options. All right, the next one are inspection fees. So this one is optional, but I do highly recommend you get an inspection before buying a property. Inspections usually cost around $500, and it's where an inspector goes to the house, checks everything, make sure that there's no leaks in the property, and make sure that the property is in good condition, and let you know if there's anything that needs to be addressed. Once you get your inspection done, you can then decide if you want to proceed with the property or back away from the deal. Because once you buy a property and if you find there's issues later on, then there's not much you can do at that point. So it's highly worth the $500 to just get the inspection done. And then finally, another hidden cost are going to be your city fees. Now these are going to be recording fees for title, state fees, and stamp fees. These are all fees that the title company will collect on your behalf. And again, there's no way around them. So in general, all these closing costs, besides the appraisal and inspection, are going to be between 1% and 2% of the total purchase price. So that's why I say instead of saving just 20% for the down payment, you should probably have at least 22% of the purchase price so you can cover the closing costs as well. Now, all those fees were just to buy the home. There are also fees with just owning the home. So naturally, once you buy a home, you're going to want to insure the property so that if there's any big damages like a fire or a car runs through your home, you want to be able to have the funds to make the repairs so that you can live in it again. Insurance typically is around $1,000 a year. Of course, this varies depending on the size of the home and location of the property. But no matter what, if you're looking for a great insurance provider, then I highly recommend checking out Steadily. Steadily is a nationwide insurance broker that helps you find the best insurance policies for your property. Typically, if you want to insure your property, you have to go to a bunch of different websites, find a whole bunch of different insurance providers, call them, find their rates, and it is a grueling process. But by using a broker like Steadily, they'll be able to just find the insurance companies that they work with a lot, and they'll even be able to get broker rates for their policies, which lets you get cheaper insurance policies for your properties. So I really like using Steadily. Ever since I got introduced to them, I've been using them for all of our insurance policies for all of our rental properties. They have a very friendly user interface where you just go on their website, type in the address, answer a few questions about the property, and then they'll auto-generate you a quote for your property. But better yet, they'll connect you with a live agent who will actually call you so you can talk to them and they can answer any questions you have about the policy. And during this conversation, they'll be able to tweak the policy so that you're not overpaying and making sure that you're not underprotected. Because let's face it, insurance is complicated and you want to make sure that you're getting something that fits your exact needs. So I've been super happy with their service and their pricing. And if you want to check them out, make sure you use the link down in my bio. Now, the next cost to be aware of are property taxes. Property taxes vary wildly depending on what state your property is in. In states like California, it's only 1% of the assessed value, whereas in places like Florida or Texas, it's 2 to 3%. And in California, your property tax is basically locked into your purchase price and slowly increments every single year. Whereas in states like Texas, they can adjust depending on how much the value of the property is. So if you bought a property for, say, $100,000, and next year the property is worth $300,000, then your property taxes may triple because of that jump. So it can make a property that was cash flowing really well actually cash flow negative. And unfortunately, you'll be paying property taxes every single year you own the property, even if you own it free and clear. Now, the next holding costs are utilities. If you live in the home, then obviously you're gonna be paying for your own electric bill, water bill, sewer bill, internet bill, etc. And if you own a rental property, most of the time the tenants take care of those bills, but if you own a multifamily property, it's actually pretty common for the landlord to pay for the water bill and sewer bills. Now, another factor of owning a property are the maintenance costs. So naturally, you're gonna be paying for any of the small minor repairs, but sometimes there are big expenses too, like if an HVAC unit goes out, or if you need to replace the roof, or if your fence blows down. These are all issues that can cost thousands of dollars that you need to make sure you have reserves for in order to pay for those expenses. And then finally, one of the biggest expenses is gonna be your mortgage. And every month you make a payment, portion of it goes towards paying off the debt, which is called your principal balance, and the other portion is to pay the mortgage interest, which is the profit that the banks make by giving you a loan in the first place. And nowadays, with interest rates in the 6 and 7%, it adds up to quite a lot, and it makes it so that the total interest you've paid over the lifetime of the loan more than 2 times what you initially borrowed. So the longer you hold on to these mortgages with high interest, the more you're gonna be paying in this hidden cost. And finally, when you sell the home, there's gonna be a set of fees that you have to pay there too. And the big one are gonna be the realtor fees. And the way that the current real estate industry is set up, most sellers are paying their real estate agents between 5 and 6% of the final sales price of the home. And this 5 or 6% then gets split with the buyer's agent as well. So your agent gets 2.5% and their agent gets 2.5%. There's recently been a lawsuit where the sellers are no longer obliged to pay for the buyer's real estate agent's commissions. So we'll see how that shakes out. But as of this recording, sellers are still paying between 5 and 6%. So as an example, if you're paying your realtor 6% of the sales price and you're selling a home for $500,000, then $30,000 of your sale goes towards the agents. Besides the realtor fees, there's also closing costs with title and escrow that you're gonna have to pay just like you did when you bought the home in the first place. And depending on what kind of loan you have, there may even be prepayment penalties for paying off the loan earlier. So these are the biggest hidden costs when you buy, own, and sell a home. And all of this can add up to tens of thousands of dollars. So again, if you saw someone buy a home for $500,000, own it for a few years, and then sell it for $750,000 later, and even assume they didn't do any kind of crazy maintenance on it, instead of making the $250,000 of profit that you assumed, they definitely made a lot less than that. So does this mean that real estate is a bad investment? Of course not. It just means that you need to be more aware and more cautious when you buy a home. You just can't assume that you're gonna make a lot of money by buying a property for $500,000 one day and then selling it a few weeks later for $525,000. So now that you know how all the costs break down, I only recommend buying a home if you plan on holding onto it for at least 7 years, because this way you can spread out the fixed cost of buying and selling the home over those 7 years and can give your property more time to actually appreciate in value, making more money for your family. Now, if you guys are interested in learning how to buy a real estate investment property, but you're not quite sure if a deal is good enough, then check out this video over here where I teach you guys how to analyze a rental property. Thanks for watching. I appreciate you, and I'll see you next time. Take care.